at a new book. It's the ledger. Now you have to remember that in accounting we work according to the double entry system. And what does the double entry system tell us? Every transaction is entered twice, once on your debit and once on your credit side. There will always be two effects in one transaction. Now we are going to see this double entry system in the ledger. Now what is the ledger? The ledger is a book that summarizes related financial information according to a chronological sequence. Now what does a chronological sequence mean? It means that it happens, or we sort it in the order that it happens. So according to dates, your earliest date first and then your latest date last. It contains a debit and a credit side, and your accounts can be either an asset or a liability or an owner's equity, like we find on the 3-column paper. So this is what a ledger is. It's a new book that summarizes related information. Now, where in the accounting cycle does the ledger fall? Now, you will remember that we get transactions. A transaction happens between two parties. And from there on, that specific transaction is recorded on a source document. Now you remember source documents, there are different ones. There are invoices, there are EFTs. So we have a source document for a specific transaction. Then we are going to record it in a subsidiary book. You haven't done this at all yet, but this will, for example, be a cash book or a petty cash book, a debtor's journal or a creditor's journal. So then we record it in a subsidiary book. And from there on, we post these transactions. We call it posting. And we post it to the general ledger. So we are going to do this step of the accounting cycle. We will go back to number 3 after this. But we first need to do this so that you can understand that part. So we are here in the accounting cycle. Now there are 3 different parts of a ledger. We have a general ledger, we have a debtor's ledger, and we have a creditor's ledger. Now the general ledger is the posting from the subsidiary books, and these are assets, liabilities, and owner's equity accounts. Your debtor's ledger will have all the personal accounts of your debtors. So every debtor will have his own account within the debtor's ledger, and only information relating to that certain debtor will be recorded in his account. So if you have 5 debtors, you will have 5 different accounts in your debtor's ledger. The same with the creditor's ledger. It's the personal accounts of your creditors, your credit suppliers. So if you have 6 creditors, then you will have 6 different T accounts in your creditor's ledger. Each creditor will have his own account. But we are going to look at the general ledger for now, for today. And let's look how we split it up. In your general ledger, you also have 2 subdivisions. The first one is called your balance sheet account section, and your second one is called the nominal account section. Now, under your balance sheet account section, you will find capital, drawings, then your non-current assets, your current assets, your long-term liabilities, and then your short-term liabilities. This is also the sequence in which you will post your accounts or your information in your general ledger. Then after you completed your balance sheet account section, you will have your nominal account section, and those are only the income and the expenses under this subheading. Now let's look at how a T account will look like. Now this is how the general ledger will look like. You will prepare these kind of T accounts. It's a T account. You will see here we have the yellow. It's a big T. Therefore, we call it the T account. The name of the account is written at the top. Here we have the name of the account, so we will write the name here. And then our left-hand side is the debit and our right-hand side is the credit. And these accounts are balanced once a month at the end of the month. Some of them at the end of the year, but we will, for now, we will balance them at the end of every month, but we are not going to do it today already. So you have to remember you have a little T or a big T. The name of the account at top, this will be, for example, capital or drawings or sales or current income. So you put the name on top and then you have your debit side and your credit side. Your debit side has different columns and you need to make these columns. You have a column for the date, for the day, for the details, for the folio and the amount. And on the credit side, you have exactly the same. A date, a day, details, folio and amount. Now in your date column, you will have your month and your year. In your day column, you will have the day, the specific day. The details column, you remember that we always have two accounts in a transaction. Now the one account will be here on top, the name, and the other account name will be in your details column. Your folio, I will show you that, and your amount is the amount that I give you in your transaction. So you have to decide, is it a debit transaction or a credit transaction, and then you record it on the respective sides. You remember Edalik, and this is also what you will use to do your ledger. Please remember Edalik in everything that you do in accounting. EDA will increase on your debit side and LIC will increase on your credit side. Now let's look at our first example. We have November 2020. This is the second, and I use the same transactions that we used in the previous lesson, so you can actually relate to what we are doing. Now the owner enlarged her capital contribution with 20,000 and the money was banked immediately. Now our two accounts will be capital and bank. And we said that bank will be debited and capital will be credited. So here we have our T accounts. We have the name on top. And we have, this is what we will use in the folio. So this is a reference, meaning that if you want to look up something, then you can look at the references and you can actually trace a transaction. So we have the name on top, we have capital and bank. So we have capital and we have bank. Now, if you can remember, we just said that we have a certain sequence. Here, let's look at the sequence again. In your balance sheet account section, you will always have capital first, then drawings, then non-current assets, long-term and short-term liabilities. Therefore, you will see that capital is GL, which stands for General Ledger, GL1. We are going to work on the credit side of capital if you think about EDALIC. So this is the credit side of capital. We have our date is 2020 November. It's the 2nd. And our other T account will be bank. Now bank here is GL5. Therefore we put it in the folio column and the amount is 20,000. Now we decided up front that bank will be debited. So we have two accounts. The other one has the name bank. GL5, General Ledger Account number 5, and we work on the debit side. So 2020 November the 2nd, the other T account is capital. Remember the name. He was GL1, 20,000. So here we have the double entry system. We have two accounts that are being affected. One is debited and one is credited. So we now know that our double entry is complete for this specific transaction. Let's look at the next one. Purchased a vehicle from Corner Motors for $150,000 and paid by EFT. So our vehicles increased, therefore it will be debited, and our bank decreased, therefore it will be credited. So let's look, we have again vehicles and bank. Now vehicles will be debited and bank will be credited, but you will see here with bank that the previous transaction is also here. So we don't prepare a new bank account for every transaction. We record all of them in the same bank T account. All the bank transactions will go into one bank account. We don't prepare a new one for each transaction. So let's see. Vehicles is debited 2020 November the 3rd. Bank is our other account. It's GL5, 150,000. Bank is credited 2020 November the 3rd. The other account is vehicles. Is GL3 and 150,000. So in our bank account, we now have two transactions, the capital one and the vehicles one. Sold goods to Jason Hollow for $2,000 cash. So we have sales and we have cash. Cash will be debited and sales will be credited. Now remember, cash debited and the other T account is sales. Sales is credited and the other T account will be cash. Now I will show you when we are back in class, if you do not really know how to do this GL or how to decide them up front, I will show you that in class, but for now and for the time being, I will always give you the folio here at the top together with a name. So again, we have cash debited, sales credited, double entry system complete. The owner took cash for her own use, so this will be cash and drawings. Drawings will always be debited and cash will be credited. Again, do you see that cash already has two transactions because the previous one is also in the same T account. So we just continue with the same account for all the transactions. Drawings we have debited, cash we have credited. Bought goods that would be used for sale and paid cash, this is purchases in cash. So cash will be credited and purchases will be debited. Do you see in cash we now already have 3 different transactions, but we are just continuing and it is in a chronological order according to dates. So cash will be credited and the other account is purchases. Purchases is debited and the other account is cash. Received cash for service provided to a customer, so this will be cash and current income. Cash will be debited with current income and current income will be credited with cash. You please need to constantly refer back to EDALIC so that you know that cash is debited because it increases and current income is credited because it is an income. Sold equipment to D. Johnson on credit. We said that this is equipment and D. Johnson. So our equipment decreased on the credit side with D. Johnson and D. Johnson owes us more, therefore we debit him with equipment. Sold goods worth $1,000 and the payment was received via EFT. So our bank increased on the debit side with sales and our sales increased on the credit side with bank. Paid water and electricity by credit card. This is water and electricity and bank. Now our bank decreased on the credit side with water and electricity, and our water and electricity will be debited because it is an expense and it will be debited with the details bank. Received commission of $800 in cash. So we have commission income and cash. Now cash increases, therefore it will be debited, and the details is commission income. Commission income will be credited because it's an income and it will have the details cash. Please look here that we do not repeat the date when it doesn't change. You will only write it again when it changes. So if there was another transaction on the credit side of cash from the 8th, then you will also not write the date again, but just do the transaction. So you only write a date when it changes again. So here I'm just going to quickly show you how it will look if you put everything together. You will say this is the general ledger of your business. I used my name. And you will say that it is the balance sheet account section. And then you will start with your capital, which is always GL1. Then your drawings, which will always be GL2. Then your non-current assets, and we had two. We had vehicles and equipment. So here we have vehicles, and then we have equipment. Then we have our current assets, which is stock or inventory, bank, and cash. So here we have the whole bank account with all the transactions in it, and the whole cash account with all the transactions in it. Then we will have D. Johnson, since he's also an asset, and we have his account. We didn't have any liabilities, so this is the end of our balance sheet account section. Now we have the nominal account section, which will have our income and then expenses. So we had sales, here is the whole sales account. Then we had current income. Then we had commission income. And then we had the expenses of purchases and water and electricity. So in the end, this is the way that your general ledger will look like. All these accounts after one another, and related information is summarized in a T account. So all the information of sales is summarized in one T account. If you think about cash, all the cash transactions and all those information is summarized in one